sentiment among hedge funds is, oh, it's just those few, it's not everybody. Interesting sentiment, because the thing that has stood out to us today on the story is what the U.S. attorney said. And he did say it best. He says he's not trying to vilify Wall Street, but
business as usual has to stop.
Business as usual. He said this is business as usual. And, well, that's implying that business as usual is like drug deals, with traders using those hard-to-trace prepaid cell phones to hide their moves and transferring bags of cash. Is this business as usual on Wall Street? Joining us, Alex Berenson, reporter for the New York Times, and Steve Lee, a fraud investigator and managing partner at Steve Lee and Associates. Good to have both of you with us. Steve, let's start with you. He said an end to business as usual on Wall Street. What was described is pretty frightening if that is in any way, shape, or form business as usual.
Yeah, that would be very frightening. And I think what we have to expect is that what he's really talking about is the practical standards of the community in terms of the hedge fund community. Not so much that I think that he's suggesting that using disposable cell phones and distributing bags of cash would be the standard of the community for hedge funds, but rather that the lax standards, the limited oversight, the fact that hedge funds really are at the edge of the envelope. They're the sort of Wild West of institutional investing. I think the message is that's going to change.
And isn't that, though, Steve, this is the tough part. I mean, where is the line? We keep asking this question, but for a smart hedge fund, if you want to, let's just say, buy or sell a restaurant stock, you're going to call all the franchisees and try to find out if there's some sort of issues going on with management, or you're going to try to find out some sort of, let's be honest, inside information, right?
Well, let's draw a line between inside information and good competitive intelligence. I think that we all understand that getting intelligence about a deal in an industry is part of the program, it's part of the drill, that's perfectly lawful, as long as you're not, going against the 33 or the 34 Act or the Espionage Act, that's expected. And in fact, we would be disappointed with these folks if they weren't trying to get better information than what is, in the common hands of the investor on the street. We want them to be smarter. That's why they provide good opportunities for wealthier investors.
So, Alex,
but you're right. There's a problem with crossing that bright line into something that is not publicly available and should be restricted.
So, Alex, let's talk about, I guess the follow-up here is, are the accused bad guys? I mean, especially when there is a gray area. I mean, prepaid cell phones and bags of cash may not be quite the norm. But, I mean, you've done a lot of work, for example, into the person who is the most high profile here, Raj Rajaratnam himself, and the portrait of him as an individual, well, it's a little bit more nuanced than some hateable guy.
Yes, I think that's true, and I think we really do need to be careful about looking at all these cases as if they're exactly the same. What some of the guys today are alleged to have done looks pretty bad on its face. Now, they may or may not have a defense, they may or may not plead, but running around, using prepaid cell phones, having conversations in cars, paying people off in cash, telling somebody you're going to go to the big house if you are not more careful. I mean, that's all described. What Raj is alleged to have done, I think if Raj winds up going to jail just on the basis of what's in that complaint, there's going to be a lot of very scared people on Wall Street, because what he's alleged to have done is trade information around corridors and try to get an edge on where something might be, where intel might be reporting, or what deal AMD is going to be doing and what the terms of that deal are.
That's much more ordinary behavior.
Exactly. I mean, I think everybody on Wall Street, that is basically the business most trading hedge funds are in, is trying to figure out a little bit in advance of other people what's going to happen. And if that is illegal, then the markets are going to look very different. I'm not actually sure how they would work.
Well, and I guess that really is the most difficult part of this. When it comes to Raj Rajaratnam, Alex, something stuck out to me about your reporting, a great article you wrote over the weekend in the New York Times. You said that Jeffrey Canada, who's a well-known philanthropist, a friend of Barack Obama's, is so confident in Raj Rajaratnam's innocence that he's willing to lose all of his own money to back him on his bail.
So Jeffrey is the head of something called the Harlem Children's Zone, which is a fairly large charity in Harlem that services 100 square blocks in Harlem, thousands and thousands of kids. And when he found out that Raj had been arrested, he went down to court. Nobody asked him to do this by his own account, and he volunteered to sign Raj's bail, meaning he was one of several signers, but meaning if Raj flees, he's on the hook. And the bail right now is set at $100 million, which means Jeffrey will lose everything. And by the way, Jeffrey did not seek me out to tell me the story. I found him by looking at who had co-signed the bail. So it's not like he was looking for publicity for this.
Right. No, I mean, that really caught my attention just on many levels. And, Steve, I guess what this gets to is these stories are a lot more complex. I mean, Alex raises the point of, well, there's people vouching for Raj Rajaratnam in particular, but also his more broad point, which is markets might not function at all if some of this behavior really is illegal.
Well, that's, you know, I don't think I can agree that markets aren't going to function at all, but I do think that what you may expect to see is this. A lot of these hedge funds work on a model that isn't going to be feasible when in fact they're required to be regulated. In other words, if they have to hone to the line the way other institutional investment houses do, then I think there's no question
What
that a lot
other
of them
institutional investment
have to
houses?
go away.
I would ask that. Is Goldman Sachs not trying to figure out what everyone else in the market is doing? Everyone in the market is playing this game.
Well, I think that if we're talking about trying to get a little bit of competitive advantage by getting better information, you're absolutely right. That's a game that everybody is playing, and frankly, everybody has to play. In fact, the Federal Open Market Committee plays that game when it sets Federal Reserve policy. And that's done in secret, and presumably with better information than the public has. So to that extent, you're right. I mean, if that's illegal, then everything is illegal. The problem that we're going to have here is the U.S. Attorney and the other law enforcement officials and regulators are going to have to define, where's this bright line? Where did you cross the line?
Mm-hmm. Well, gentlemen,
because it can't be about just getting good information.
Guys, thank you very much. We appreciate it. And we'll
Thanks,
leave it on
Aaron.
this note. What Alex reported, Jeffrey Canada, as we said, the philanthropist who is a friend with Barack Obama, said about Raj Rajaratnam. He said that I have not had a moment's doubt knowing his character. I am not worried about it at all. Keep in mind, we are counting you down right now to perhaps a decision on the bail for Raj Rajaratnam, which right now is set at $100 million. Those headlines could cross any time, and Scott Cohen will be along with them.